Funding for Market Journal is provided by the Nebraska Soybean Board.
America's export of soybeans helps the U.S. maintain a positive agricultural trade balance. Nebraska contributes half of its soybeans for export. The protein and oil content in soybeans enhance the growing demand for higher protein diets. The Nebraska Soybean Board promotes research to develop new soybean varieties with higher protein and oil content for major agricultural markets. The Nebraska Soybean Checkoff, growing opportunity from the ground up.
Market Journal, television for agricultural business decisions, is a presentation of the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources. Promotional support is provided by the Nebraska Farmer Magazine, and major funding for Market Journal is provided by the Nebraska Soybean Board. The Soybean Checkoff, growing opportunity from the ground up.
Welcome to this week's edition of Market Journal. I'm Jeff Wilkerson. On this episode, Mike Briggs looks at the slide in cattle markets. John Meuret analyzes corn and soybean prices. Nathan Mueller talks about an area of Nebraska lagging behind in increasing soybean yields. And Brad Lubin discusses the crop insurance portion of the Farm Bill. Mike Briggs is our cattle market analyst this week. USDA data shows all fresh retail beef climbed to another new high during the month of November. The average cost of $5.98 per pound was 3 cents higher than October and 97 cents more expensive than a year ago. What could help the shopper's budget is the falling value of gasoline. The price at the pump has dropped for 11 straight weeks, and the U.S. Energy Information Administration expects the average U.S. household to spend $550 less on gasoline in 2015. We talked with Mike Wednesday morning about demand next year, slaughter weights, and the recent slide in cattle markets.
Yeah, I'm not going to laugh and smile this time when you ask me. We've really rolled this market over, and I think a lot of it is just funds. The funds are so big and powerful in these commodity markets, and everybody loves them when they're pushing the market your way. But when those guys decide it's time to get out, it's like people trying to get out of a burning theater, and it just hammers it and hammers it. You know, we've been down limit 2 days in a row. We've taken, I don't know, $15 out of this thing in the last 10 days. I think today we maybe found some footing, so we'll kind of see if we can stop here. I don't think we're going to shoot right back up, though. I think it's going to have to be a slow grind, and some cattle feeders might get a bloody nose here for a minute.
Going into 2015, then, what are your price expectations further out?
You know, I kind of think it's going to be typical. I think you're going to struggle through January and February, which are typically poor beef demand months anyway. You've got high-priced beef. And I think enough guys have held cattle here that you may have bunched up some marketings a little bit, plus some other things that are going on, like there's going to be quite a few cows slaughtered right after the first of the year. So you might end up with a little more beef here than you anticipated initially, and I think that could pressure the market. But we never have cattle in March, and I don't think this year's not going to be any different. So I think as you get towards that grilling season, I think numbers are going to be pretty slight again, and you might start building this thing back up. Now, if all the cards fall right, you may go right back to where you were at these highs. But I think everything's got to kind of fall right, otherwise it's not happening.
The follow-up I have to the demand is that with much cheaper gas, is there a chance that the consumer who ran away from beef when it was too expensive now has more money and re-enters the market? I
think that's a great call, and that's what I hope. The thing that we had, the other issue we had going for us last fall while things were running up is the competing meats were not competing very well. They were high priced, pork was higher priced, but now those guys have kind of flipped their switch like they do, and you've got a lot more pork and a lot more chicken. So if that consumer doesn't feel very good, that stuff's going to be dramatically cheaper than beef. But you would hope demand will come back. I think a lot of that demand that may come back is you may see more visits to restaurants, and typically when people go to restaurants, they'll eat more beef.
Corn, as we go farther into 2015, it's right, what, around $350 cash right now, somewhere around there?
Well, no? It's a little higher than that actually right now, because basis is good. The farmer has, typically when the corn is in the farmer's hands, they call that weak-handed, but those weak hands have a lot of cash behind them, and they've been able to hold this corn really tight. And ethanol production has not slowed down, even with the drop in oil. To this point anyway, it hasn't. And so basis has been good, demand for corn has been good, but I think after the first of the year, you're going to see the typical thing where the farmer goes in and it's time to cash his check. And I think the air kind of comes out of this balloon, and we worked this corn lower for a while. Are you going to go back to the old lows? No, but gosh, I'd like to think we'd take 50, 60 cents out of this thing.
Well, gosh, that'd be nice for you, wouldn't it? Just a couple quarters out of it would really be nice, huh?
Anything cheaper would be good.
Okay, slaughter into the first quarter, first half of next year.
Well, all the big shots are saying it's going to be less, but I kind of wonder if we, the cattle feeder, haven't screwed this up a little bit by backing up cattle and some people holding them into next year, either because they don't like the price because we've had a break, or they want to make them bigger, or they're avoiding taxes. I don't know. But if we bunch enough cattle up into that first 2-3 weeks of January, plus you have a bunch of cows come into slaughter, because one of the things that's made this market good is we've had to grind in meats to supply lean for hamburger because we haven't had the cow slaughter. Well, there's going to be a lot of more cows coming to market out the first year. You've got these ginormous cattle coming to market. Imports of lean beef have been tremendous because the dollar is worth so much. They're having a drought in Australia. They got to get rid of cattle. We need lean beef, and the currency thing works perfect. So you're seeing a lot of lean get imported. I think the ice could be a little thin here. It could be a little tough sledding here after the first year for a little bit.
So to close out with, and we've talked about this before, but are you indicating that weights are only increasing coming out of the feed yard?
I would like to say they've leveled off, but they're dramatically higher than historical. And until Mother Nature either comes and makes it worse, or the packer comes with discounts, people are going to keep making cattle big.
Next week, Ed Ussett from the University of Minnesota will join us to talk about the 5 common mistakes producers make when marketing grain. We also have a look at corn and soybean markets this week with John Meuret from Meuret Grain Company. John joined us Wednesday afternoon to talk about China's approval of Syngenta's MIR 162 corn trait, basis levels, and crush numbers in soybeans. We began by talking about corn's rally and what led to it reaching a 5-month high Monday.
Well, a lot of things, Jeff. We were oversold going into harvest. I think harvest was strung out 60 or 70 days, and so it let the corn crop get tucked away fairly easily. And once it was tucked away, we rallied. And on top of that, you've got some Russian problems going on. You've got some FSA acreage data, and wheat's going to move higher. So when wheat moves higher, it's going to pull corn up a little bit.
So wheat is a leader in this?
Wheat's been a leader in this, in my opinion. I think independently, corn's probably 30 or 40 cents less than this. It was due for a rally, but I don't know about a dollar rally. 50 cents probably would have been about right.
Tom Vilsack said this week that China has approved MIR 162. Does that make a difference?
I don't think so, Jeff. It's symbolic. It's a good thing. But again, I think the problem is not the trait. I think the problem is that China didn't need the corn. So when we get worked through their stockpiles, and we will, I think then they come back in for more corn. But the real problem, again, is that they don't need it, and they're going to find another scapegoat. In this case, it'll probably be another trait that's unapproved for China.
Has this rally that we've seen, has it knocked any corn loose?
It knocked a lot of corn loose. I think people have bought 20 or 30% of their harvest bushels in the last week or 10 days, and it's softened the cash markets a little bit. The weather, up into this last week has been outstanding across Nebraska. You don't find snow except for the northern, maybe 1/3 of the state or something. So, yeah, there's lots of cash moving. Seems to be easy to buy, and the farmers, he's rewarding the market.
Do you believe that prices can increase from here or no?
Well, there could be some increase, especially when you take what's going on in Russia again. If wheat wants to move 50 cents higher, you'll certainly put a quarter on corn here, 25 cents on corn. So,
what about 2015 sales? Does anything look appealing?
It's starting to. I said early on I was friendly corn and negative soybeans, and we may get to my corn number without the soybeans, really breaking yet. But yeah, I do. I think you got to sell 4.5 for 475 D's 15 board.
Tell me where basis is in your area of northeast Nebraska, because it is varied across the state.
It's varied a lot, but you're going to see it 20 to 40 under, really east to west. The crop was ample up there, but I wouldn't say it was overwhelming. Certainly you get into South Dakota, Jeff, that's where you start seeing the cheaper basis.
And it's moving which way?
And the corn's moving north to south.
No, it's the basis.
I'm sorry, it's widening.
Yeah, it's widening. Okay, yep. And in beans?
Beans are probably just flat in the last 2 weeks here. That cash basis level is probably going to trade somewhere closer to 20 to 30 under at the processor. Bought a lot of beans early this year. I think the farmer harvested them first, obviously, and then he sold them. He sold them when they were 9. He sold them when they were 10. And when they got to 10.5, I think he just scratched his head and said, now what? So a lot of beans moved, satisfied what needed to be satisfied, and then the export program is winding down now. So
would you describe yourself as bearish in beans?
I'm negative on soybeans, Jeff. And I think the problem is if you can get to Christmas, which is next week, and you don't have a weather problem in South America, I think you have to start thinking, okay, we got to protect, we got to get on the backside of this thing and be ready for a fall.
The expectations on Monday would be that NOPA crush numbers would be really big. What did they show?
You know, they were big, but they weren't record. And I think everybody was feeding into the story that we can't make enough meal, can't get to the right places, and so the crush has to be enormous. And in fact, it was the problem of the crush wasn't that big and the rail wasn't that good, and that's why we couldn't get the meal in the right places. So.
One more on meal and price. Where has that price been moving on soy meal?
Soybean meal, you know, started fairly cheap. We were underneath $300 for probably 2 or 3 weeks, early harvest, and then we quickly rallied. We took it from about a $300 item to about a $400 item in the matter of 30 days, and so we've got the D-sport off now in soybean meal, but you've still got the January contract hanging around that 360 mark, and the real problem, Jeff, is basis. Basis on soybean meal are 20 to 25 over, so we need to break that cash back. We did a little bit in early October, but then it rallied up strong against the December. So.
More news from that Chinese delegation in the country this week. They announced that they'll buy 1 million metric tons of soybeans in 2015. Is that anything more than symbolic?
Nah, they do this every year. In fact, it always troubles me. You look for these, you know when they're coming, and then everybody says, well, they're going to make the big announcement. Well, they're framed contracts, Jeff. They know they're going to buy so many tons each year from the U.S. This week happened to be 1 million metric tons, and the trade was expecting 3 or 4. Does it matter? Absolutely not. China, just like on their corn, has got their bean shipments moved to the front of the period rather than the back of the period, and so they're literally swimming in soybeans today. So doesn't mean they're done forever, but they can certainly take 30 days off here, reanalyze, and then rebuy come spring.
As we mentioned earlier, we'll hear from Ed Ussett next week about common mistakes in grain marketing. In 2 weeks, Frayne Olson from North Dakota State will join us to talk about possibilities for total corn and soybean acres in 2015. Not considering this year's crop, since 1970, Nebraska corn yields have grown by an average of a couple of bushels per acre, 2.1 in irrigated situations and 2.0 in dry land. Soybean yields, meanwhile, have grown by 0.6 bushels per acre in irrigated fields and 0.4 in rain-fed. As an average, the corn to soybean yield ratio is about 3.2 to 1 on irrigated ground, meaning for every 3.2 bushels per acre gained in corn production, 1 is gained in soybean. But there's one area of the state that remains behind the norm. Growers in certain northeast Nebraska counties have recorded a corn to soybean ratio of 3.4 to 1, meaning their soybean improvements are behind the rest of the state. We recently talked with UNL Extension cropping system educator Nathan Mueller about why this section of the state might be lagging behind.
When you look at the corn to soybean yield ratios across the state of Nebraska, it was an area where that ratio was the highest, meaning corn yields have increased faster and soybean yields haven't kept up. And not just a yield per acre, but just the ratio is further apart in that part of the state. So why is that? What's going on in terms of interaction between genetics, environment, and management, which I call GEM? So what's going on there? And I think that the key point moving forward is to not only small plot research, but on-farm research with producers on their field length, and using the technology we have to maybe try to pinpoint what we can do to narrow that ratio a little bit.
Do these growers operate in a different kind of environment where they are?
I think in northeast Nebraska, predominantly a lot of that is rolling hills, less hills in northeast Nebraska, maybe a little bit different than maybe the York area where it's pretty flat. So historically, the erosions probably has increased the variability across hillsides. So we may have lost 6 inches on hillsides, and then we've added another 6 inches at the bottom of the hill. What that does is it creates a lot of variability in terms of water holding capacity, nitrogen mineralization, and then pH. And pH is a big one for soybeans.
Let's talk about some possible ways that they could increase yield. You say one of them is row spacing. Describe the pros and cons of row spacing.
Yep. So we know from regional studies, on average, we're going to see about a 3 bushel increase with maybe 20 inches or less for row spacing versus 30. And the thing I want to highlight to producers is that 3 bushels, that's an average over years and environments. Some years it might be a 9 bushel difference, some it might be 0. But generally, it's the same yield or better with narrow rows. Now, with narrow rows comes the risk or the perception that white mold might be an issue. And that's occurred a little bit more frequently here in Nebraska, maybe occurs more frequently further north. But one, again, variety selection for white mold and reducing your seeding rates. That's another area that we've looked at a lot in Nebraska. Can we reduce our seeding rates? And the answer is mostly yes. Between doing that, that's going to also increase air movement and reduce white mold issues.
Planting date, we've heard so much about the push to get the people in the field earlier. That's another way?
Yeah, I think, going into the environment we are, what can we do better each year, and focusing on practices that we know are going to work. And planting date's a big one. As we move north, I was in South Dakota before, planting date just as critical. So in June, you're losing over a half a bushel per acre per day. So I would say the focus isn't necessarily starting sooner. People who started sooner this year got nipped by frost. So I think the focus is how can we finish sooner? Because your biggest yield losses are at the end of the season when you're trying to finish up planting. So how can we finish sooner? I think is a highlight producers need to assess in their operation, and that answer is going to be different for every farm operation.
And then you mentioned this earlier, and we've talked about this, I think, a few times on this show already, seed selection. How would you advise growers to just think differently about the way they're selecting their seed?
There's been some data even in Nebraska for a long time that certain varieties might respond more to irrigation than others, or some just have different yield potentials. So looking at variety performance in your environment under your management is really critical. So working with your seed dealer to get on-farm testing varieties are really important. What do they have in terms of local data? And then looking at third-party trials such as first trials in the region.
Finally, how important do you think it would be to look outside of Nebraska at South Dakota or Iowa or states like that to see if there's also a regional difference in those states?
Yeah, I think this corn to soybean yield ratio that we did analysis, Pertuccio and some other faculty did on campus, it'd be really interesting to extrapolate that out. When I saw in South Dakota, same thing here, as you went from southwest to northeast on corn, we were seeing more yield per acre per year, almost 3.5 bushels per acre per year in the northeast versus the southwest. So getting a regional perspective of what's going on, and then capitalizing on the information we have for the greater region to see if we can come together, multi-university and companies, to solve some of these local issues that we're seeing.
Nathan talked with us earlier this fall about the importance of soybean seed selection. We'll link back to that interview on the Market Journal website. In light of high beef prices and disaster payments, the December Nebraska farmer says cattlemen this year need to consider several tax management strategies. In this month's issue, you'll find 8 strategies as outlined by UNL Extension educator Jim Jansen. The article explains how USDA payments on livestock and forage losses from drought years will affect 2014 taxes. Anthony Barrett of Nebraska Farm Business Inc. also has pointers for beef producers in the article. You can find that information in the December Nebraska Farmer. UNL Extension Public Policy Specialist Brad Lubin joined us in our previous episode to discuss ARC and PLC. That interview can be seen on the Market Journal website under the Previous Programs tab or through the Market Journal mobile app. While at the Power Farming Show last week, we also talked to Brad about how crop insurance comes into play when looking at both ARC and PLC.
Well, if we've talked about what ARC and PLC, how difficult that commodity program decision is, but it's not fair to compare just ARC and PLC, because if you're in PLC, you also have the opportunity to purchase SCO, Supplemental Coverage Option. That's a new crop insurance plan that came in the crop insurance title of the bill. Think of it as a supplemental plan to stack on top of your individual plan. Producers buy individual coverage up to some protection level. Well, SCO is a county-based policy that covers the gap between 86% maximum and whatever protection level the producer buys. So what's SCO worth? Well, it depends on what level of underlying crop insurance you buy. The lower levels of crop insurance you buy, the bigger gap SCO covers, the more it's potentially worth. So what's ARC versus PLC plus SCO worth? It looks like I buy down on crop insurance so that SCO looks bigger so that PLC looks bigger. But then I'm forgetting what buy up crop insurance is about. So I've got to think about the underlying crop insurance decision. What's my optimal level of coverage in a buy up policy that's an individual farm level policy? Most producers in Nebraska are buying 70, 75, 80% coverage. We've been gradually moving up in the level of coverage we're getting. With that level of coverage, there's a gap left. Should I think about SCO? Should I think about PLC so that I can buy SCO? Or should I stay in ARC and buy a higher level of coverage? Those are trade-offs that I have to make now that I didn't have to think about before.
With ARC and PLC, it's a 5-year decision, but with this, you can limit your risk in that it's a yearly decision.
Correct. ARC and PLC is a single decision for 5 years. SCO and buy-up crop insurance is an annual decision that you make with your crop insurance agent. Should I buy a higher level of individual buy-up coverage, smaller band of SCO? If I go into ARC, I know I don't have SCO available, so I'm thinking about an optimal level of crop insurance coverage. But that's an annual decision that we'll want to study with some of the same tools that we're studying the farm program decision with.
Your emphasis is that there is a relationship between the two, though.
Correct, very much so, and a relationship to the commodity program itself. So there's sort of 3 parts of this safety net. There's the commodity program, ARC versus PLC. There is the underlying buy-up crop insurance coverage, and there is this supplemental coverage, SCO, that might stack on top if you're in PLC. Think of those as 3 parts of a portfolio, and think about analyzing the portfolio as a whole, not the individual parts of the portfolio. The best decision on the commodity program may not be the same decision when you add in SCO, but that may not be the same decision as when you think about buy-up as well. So think about all of them and put that decision together.
With this attention being paid to SCO, are there other crop insurance options or decisions to make as well?
There are actually several crop insurance provisions, some key ones that have come out. Conservation compliance is now tied again to crop insurance participation. That doesn't affect a lot of producers or a lot of acres, but for some producers that have been out of the program but in crop insurance, it's a new issue to address. Another key change in crop insurance is the availability of enterprise coverage by practice, meaning irrigated versus non-irrigated. In Nebraska, with a mix of practices, the enterprise unit may not have been an effective tool, a choice for producers, because it sort of combined 2 very different practices, one sort of subsidized the other. Now you can separate and insure those by practice. Could be extremely valuable. Another key provision that showed up is for beginning farmers. Qualified beginning farmers, another 10 percentage points of subsidy on top of the existing rates. So very attractive crop insurance rates for beginning farmers.
Now with this week's weather forecast, here's UNL Extension State Climatologist Al Dutcher.
Well, folks, here again for the weekly forecast. Of course, during this last week, we dealt with a big system that came out of the Central Rockies and dropped some significant moisture across a considerable portion of the state. In fact, we have some locations in west central and central Nebraska that were up near the 1 1/4 to 1 1/2 inch range in terms of liquid moisture. And so when we think about that, that equates out to nearly double what we would expect to see during the month of December. And if you start to look at the entire state, this precipitation event brought anywhere from 40 to 80% of our annual winter precipitation. Now that counts for the December through February period. That's what we would typically expect, about 1 1/2 inches in western Nebraska liquid equivalent. In southeastern Nebraska, somewhere between 2 1/4 to 2 1/2 inches. And then of course we had another system that just skirted to the south of Nebraska but did bring some accumulating snowfall to southeast and south central Nebraska. Totals anywhere from just a dusting to upwards of 3 to 4 inches right along the Kansas border. Now, as we go through this weekend, we have yet another system coming out, at least during the latter half of the weekend, and more importantly, a rather aggressive pattern looking to shape up right for the Christmas holiday period. So let's take a look at the upper models and see what we can expect. First of all, here's this troughing pattern, kind of got little waves in the atmosphere, and there is a little bit of an energy in the mid layers of the atmosphere that's going to pass through the state today that could actually generate some very, very light precipitation, particularly over the northern 1/3 of the state. And most of this will probably be during the evening to overnight hours. And as we go into tomorrow, we'll notice that this trough starts to deepen, and this is going to bring precipitation to western Nebraska, and then it will slowly start to spread toward eastern Nebraska. Temperatures at the surface at the onset of this precipitation event will be above freezing, so we would expect this to start out as a liquid event, changing over as the cool air comes in to more of a solid type precipitation event for western Nebraska. Eastern Nebraska, we may have to wait till late in the night hours of Sunday into the early Monday morning hours before we start to see that transition, but you can see that the cold air starts to funnel in, and this system will really energize itself as it moves into the eastern United States and bring a fairly significant storm to much of southern Ontario and the northeastern United States. As we get into Tuesday, you can see the system really starts to dip down deep and then it's going to explode as it moves toward the northeast, and we see this cold fetch of air, so below normal temperatures are expected. As we get into Wednesday, we start to see this low starting to pivot around the Great Lakes region, and I'll draw your attention to this short wave that's starting to move through. It's going to be able to attack this cold air and start to generate precipitation, particularly during the overnight hours across western Nebraska. And by the time we get to Thursday, the system, as it drops down into southeast Colorado, we'll start to see a more general snowfall accumulations occurring across western Nebraska and western Kansas, and that will spread eastward during the day, and we could see some significant accumulations. Please keep a check of the weather. This models right now are all over the place in terms of the intensity of the storm, but they are bringing a common denominator together, and that is some inclement weather that will cause some travel problems across the central United States. Time we get to Friday, of course, the system rapidly moves to our east, and we're in this cool northerly flow. So as we look at the temperature forecast, the warmest conditions are this weekend. Then we get a cool down as we go to the middle of the week with that impending snow event for Christmas. And then very cold conditions set up immediately after that. 8 to 14 day forecast keeps the cold air in place at least through almost the end of the month in terms of precipitation. Looking at still above normal precipitation, but I'll remind you that this cold air that is in place will move to our east, and warmer weather will move in at the first of the month.
Thanks, Al. Today's interviews can be found on the Market Journal website and through the Market Journal mobile app. They include information on cattle markets, corn and soybean prices, improving soybean yields, and the crop insurance portion of the Farm Bill. As always, you can keep up with Market Journal during the week by following us on Facebook, Instagram, and Twitter. Next week, Ed Ussett from the University of Minnesota will join us to talk about 5 common mistakes in grain marketing, and Bryce Anderson from DTN will forecast weather conditions here over winter and in Brazil and Argentina during their growing seasons for soybeans. Until then, thanks for watching. I'm Jeff Wilkerson. We'll see you next week.
Join Market Journal online at marketjournal.unl.edu. You can also follow us on Facebook and Twitter. Promotional support is provided by the Nebraska Farmer Magazine. Funding for Market Journal is provided by the Nebraska Soybean Board. The Soybean Checkoff, growing opportunity from the ground up. Market Journal is produced by the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources. Funding for Market Journal is provided by the Nebraska Soybean Board.
A diesel-powered engine on a farm works hard and operates in a grueling environment. Soy biodiesel fuels stand up to the challenge of powering farm equipment, but are also renewable and environmentally responsible as well. The Nebraska Soybean Board is committed to encouraging the use of soy biodiesel to protect the environment and sustain Nebraska's agriculture. The Nebraska Soybean Checkoff, growing opportunity from the ground up.